WTI crude oil futures stayed near $73 per barrel on Friday as traders awaited further clarity on President Trump's impending tariff deadline. While Trump reaffirmed plans to impose 25% tariffs on Canada and Mexico starting Saturday, he suggested that oil might still be exempt. Given that Canada and Mexico are the top crude suppliers to the U.S., the decision remains a key market focus. Meanwhile, investors are closely watching the upcoming OPEC meeting on February 3, as Trump continues to pressure the group, particularly Saudi Arabia, to curb oil prices. Traders widely expect OPEC to maintain its current supply policy, with any additional increases likely delayed until April. For the month, oil remains on track for a second consecutive monthly gain, supported by early reports of U.S. sanctions on Russia and colder than normal weather across the U.S. Natural gas extended its decline on Friday, approaching key support at the 100-day moving average of $3.07. A rebound from this level could trigger technical buying, but a decisive break lower may accelerate losses toward the next support zone near $2.75. With weather-driven demand easing, traders remain cautious about near-term price momentum. The National Weather Service projects a mild start to February, with temperatures reaching the 40s across the north and 70s in the south. While brief cold spells are expected in the upper Midwest and Northeast, overall heating demand remains lower than January's deep freeze, which had previously fueled a price surge. Analysts anticipate subdued demand in the coming week, with only fleeting periods of cold. Without a prolonged chill, natural gas bulls could face challenges in regaining control of the market. Meanwhile, European natural gas futures climbed toward €53 per megawatt-hour, approaching their highest level since October 2023, as colder weather drove up demand and Norwegian supply disruptions tightened the market. Outages at Norway's Gullfaks, Troll, and Åsgard fields have reduced gas flows to Europe, with Norwegian gas nominations dropping to 313 million cubic meters on Wednesday, a 5 mcm decline from the previous day. Adding to supply concerns, European gas storage levels have fallen to 55% capacity, down from 71% at the same time last year, with depletion expected to accelerate in the coming days. Meanwhile, forecasts indicate lower wind speeds, but temperatures are set to return to seasonal norms, with light to moderate frost expected at night. From a technical standpoint, with milder weather on the horizon and demand easing, natural gas futures face downside pressure if the 100-day moving average fails to hold. A break below $3 could open the door to further losses, potentially driving prices toward $2.75 or even lower. While storage deficits offer some underlying support, sustained upside may be limited unless colder temperatures return. However, the prevailing trend suggests that the deficit could swiftly turn into a surplus, intensifying pressure as the spring season approaches. The market remains at a pivotal point, with price direction largely dependent on upcoming weather trends and key technical support levels. Please like, subscribe, and comment to support the channel. See you in the next one.